Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.cu portal. Here we go. Today is April 6 and we're starting from euro-dollar pair as usual with Jakub Novak. The PMI figures for the Eurozone services sector and the composite PMI index disappointed traders, which did not allow the buy signal to work out properly in the first half of the day. The US data was also not better. After an unsuccessful jump, the euro came again under selling pressure. Today, euro-dollar is expected to trade quietly since there are no important statistics. In the first half of the day, market participants will get to know the reports on Germany's industrial production and the PMI index for the construction sector. Strong data can prop up the euro, but we don't expect a big upward movement. In the second half of the day, the US Labor Department will release a weekly update on initial claims for unemployment benefits. Besides, the FOMC member James Bullard will also come up with his comments. Today, you can buy the euro when the price reached around 1.0918, with an upward target at 1.0947. At the 1.0947 point, we recommend exiting the market and also opening short positions in the opposite direction, expecting a 30-35 point from the entry point. We could hardly count on euro-dollar's growth today, although the bulls may re-enter the market. Before buying, make sure that the MACD line is above zero or is starting to rise from it. You can also buy euro in case of two consecutive prices test of 1.0891, while the MACD indicator in the oversold area. This will limit the pair's downside potential and lead to a reverse market turnaround upwards. You can expect the price growth to the opposite levels of 1.0918 and 1.0947. For short positions, you could go short on euro after euro-dollar pair reached the 1.0891 level. The target will be placed at 1.0864, where we recommend exiting the market and immediately buying the euro in the opposite direction. We reckon a 20-25 point move in the opposite direction from the level. The instrument will again come under selling pressure in case of failed attempt to consolidate at daily highs. Important: before selling, make sure that the MACD indicator line is below zero or is starting to move down from it. Another option to open short positions is the situation of two consecutive tests of 1.0918, while the MACD indicator is in the overbought area, as only by that will the market reverse to 1.0891 and 1.0864. The next stage is the next major. How to trade GBPUSD, tells us Sebastian Seliger. The GBPUSD pair has made another high at the level of 1.2524 as the uptrend continues. The intraday technical support is seen at the level of 1.2422. Nevertheless, the last push to the new swing highs had produced a pin bar on the H4 timeframe chart, as the market conditions on this timeframe are now extremely overbought. So now the cable started the pullback cycle. Pullback target is seen at the level of 1.2422 and 1.2394. When the pullback is completed, the market should resume the uptrend towards new swing highs. Potential bullish movement on USD GPY pair, Petar Yakimowicz describes. USD GPY has been trading upside this morning, and we found breakout of the supply trend line, which is good sign for the further rally. Due to the breakout of the mini downside channel, Petar sees potential for the further rally towards upper references. Upside objectives are set at the price of 131.80 and 132.20. Both MACD and stochastic oscillators are showing bullish divergence, which is another good confirmation for the further rally. Key intraday support is set at the price of 130.80. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitris Tapas. Early in the European session, gold is located below the 21 SMA and below +8 Murray level 2031 and is trading around 2010.07, making a technical correction. Yesterday, in the American session, gold extended its advance to a new one-month high at about 2032.05. Around this level, it found a strong rejection triggered a technical correction towards the 2010 level. On the 1-hour chart, we can see that gold has made a strong technical correction after having reached the key level of 2031. And is now showing signs of a probable technical rebound for the next few hours. A price drop of 20 USD means that gold is showing signs of exhaustion. The metal is likely to resume its technical correction and could reach the psychological level of $2,000. This corrective movement could be considered profit-taking due to the bullish movements we have seen in the last few days. Gold is expected to resume its bullish cycle in the next few hours, but for this, we could expect a rebound around 2008 towards the 21 SMA, located at 2021.21. The yield of 10-year Treasury bonds reached a low of 3.27%, last seen on September 8, 2022. It's likely that if the downward movement continues, it could favor the recovery of gold and its price could reach 2031 and +28 Murray at 2062.50. And finally, the 1-year high of 2075. The outlook remains bullish for gold and it could resume its bullish cycle if it returns and trades above 2031. Then it could move towards the 2065 zone, +28 Murray level. Below the psychological level of $2,000, we could expect a strong technical correction. And the instrument could reach 1982 200 EMA level and the 7-8 Muri level located at 1968. Our trading plan for the next few hours is to buy gold in case it rebounds around 2008. With targets at 2021. On the other hand, in case there's a pullback towards 2021, that is where the daily pivot point is located. It could be seen as a signal to sell, with targets at 1982, 200 EMA. The next in line is Lowry Bailey with AUD-USD pair focused. Yesterday, the Australian dollar declined and today it's falling as fast as it was rising on Monday. The price fell below the balance indicator line, red line on graphic, intending to reach the 0.6670 target, which it failed to hit yesterday. But the Marlin oscillator is in no hurry to fall, creating the risk of the reversal above 0.6730. To reduce this bullish development, the price should consolidate under the balance line. It means close below this line by today. Your bearish targets are 0.6670 and 0.6628, lows of the March 24 and December 20. Climbing above 0.6730 and consolidating will encourage the bulls to continue rising to 0.6873, intermediate level at 0.6810. On the 4-hour chart, the price settled under the MACD line. The oscillator signal line is in a descending territory. The main trend is downward. That's all for today. See you online soon. Good luck.